Hey, it's Kip Adkins with Diversified Financing Solutions, here to talk about the third part of that BRRRR strategy, that BRRRR strategy. This is where we get into the DSCR loan, or rental loan, or landlord loan, whatever you want to call it. This is a great loan on its own. Standalone, whether you're buying just a rental property, it's rent ready, or you've already got a rental property and you want to pull some cash out to make other real estate investments. This loan stands on its own as one of the best loan products for a real estate investor. DSCR. What does it stand for? It's debt service coverage ratio. What this means is that you're qualifying as a borrower based on the income from the property alone. We're not going to look at your tax returns, W-2s, none of that stuff. We don't even care how much money you make at your job. We just want to see that that property brings in enough income to pay for the principal, interest, taxes, insurance, and, if applicable, association dues. So let's get into the good and the bad. The good, well, we don't need any verification of personal income, like I mentioned previously. If you're purchasing under an entity or an LLC, the loan is not reported on your credit. It's a business purpose loan. It's a quick borrower underwrite. We check your FICO, your credit background. It's that easy. The next thing we look at is the property. We do that through a third-party appraisal. He's going to tell us what the property is worth now and whether the property is rented at fair market value. If it's not rented, what that fair market rental value is. Rates for this loan product are phenomenal. Right now, we've got rates starting at about 7% and it goes up from there. If the rent doesn't cover the expense, then the loan just won't work. The best rate and terms typically include a 5-year prepayment penalty, and the minimum down payment for this loan is 20%. Now the bad, if it's really that bad. These are probably just the hurdles you need to be aware of. If the rent doesn't cover the expenses, principal, interest, taxes, and insurance, then the loan is not going to qualify. These loans typically, for the best rate and term, have a 5-year prepayment penalty. I can get a little bit more into that. We have options on how to shorten that prepayment penalty. It's not as bad as it sounds. And additionally, if the property has any deferred maintenance in excess of around $2,000, we're going to have difficulty with this loan. If there are repairs needed, we do have a solution. We take you back to that BRRRR strategy, utilize the fix and flip loan and take out that loan with the long-term DSCR or rental loan and get you rocking and rolling. There's a little bit of information for you, enough to make you dangerous. Let me know if you need additional help. You can put 15 minutes on my calendar. The link is below, or feel free to call me directly at 800-228-8180, extension 100. Let's connect and get you rocking and rolling on your real estate investment journey.